Hello and welcome. My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts today. And the first chart I'd like to look at is the euro against the dollar. Now, if we look at this, we can see the following. A third lower, small bearish black crow yesterday, but also an indecisive spinning top. I gave the market the benefit of the doubt yesterday in possibly calling it a lower indecisive spinning top. Not so today. It is one. It was also the lowest low and low close for the year so far. We can hardly blame the market for being cautious in its decline, as just below we have the very recent 50% Fibonacci line at 119.75 and the gently rising medium moving average currently 119.66. This nevertheless reinvigorates the previously mentioned idea of the 2021 action being a bear flag. Target axe for that would be in the 119.25 area. So far today, a test down. It looks like it may be interesting today as the market tests those supports and gets closer to target X. The next chart to look at is cable, aka sterling against the US dollar. A bearish engulfing pattern yesterday with not only the lowest close for 2 weeks, but also a first close below the important combined support of the short moving average, currently 136.62, and the interesting lesser 61.8% Fibonacci line for the whole of the 2016 move at 136.54. Overall, we still see the same action on top that we've had since November last year. The dynamic capping resistance of the middle time, currently at 137.89, the important late June to late September 2020 bullish shift pitchfork. So far today, a good exploitation of that close below the supports. Now possibly resistances. We've dropped down towards the next level of support, congestion at 135.65, short medium moving average, currently 135.27, and a 2019 high at 135.16. The next chart I'd like to look at is euro against the sterling. Countering to the recent bearishness here yesterday, a bullish piercing line pattern, almost a bullish double as well. Overall, the market has been moving down from the recent break of the extended, if imperfect, sideways triangle pattern formed since April 2020. It's not having an easy time of it. Yet we now have resistance overhead of the 50% Fibonacci line of the December 19 to March 2020 move at 88.89. Below we still have the potential target X, the target for the double top formed in mid-December in the 87.5 area. If the market resumes its decline, we might soon start looking further down at potential targets for the sideways triangle and maybe a small and large pair of head and shoulders tops. So far today, an initial follow-on higher to yesterday's bullish action. Most recently, the rise has been tempered with a move back down towards the unchanged level on the day. The next chart to look at is US dollar against the Indian rupee. Second bearish black crow yesterday and a follow-on lower to the previous session's bearish harami. We're now more or less into the second week of backwards and forwards, mostly indecisive or countering movements. The topside was once again capped by the descending short moving average, currently at 73.01, and a low supported by the August 2020 low at 72.75. So far today, an open lower, but since then we've tried to move back up. The whole day's range is caught within the main body of yesterday's action, looking once more indecisive. The final chart to look at is the US dollar against the Brazilian real, a lower but still indecisive spinning top yesterday. It was nevertheless the second consecutive close back below the broken upper time, currently at 541.56 of the late October 2020 to early January 2021 bearish shift pitchfork, as well as the supposed congestion area consisting of the combined flatlining medium moving average, currently at 540.16, the long moving average, currently 538.77, plus two 50% Fibonacci levels at 539.29 and 540.85. Below we have a current combination of a lesser Fibonacci level at 531.43 and a new short uptrend, currently at 531.95, that held up yesterday's move. Further down, we have some congestion in the 530 even to 529.15 area before the next support, the short medium moving average, currently at 526.92. So that about wraps it up. So in the meantime, good trading and stay safe in the markets and in real life.